Global trade is being rewritten with more tariffs, tighter controls on tech, and supply chains pulled in different directions. And Singapore is feeling it from all sides. A less certain economy, rapid AI disruption, mounting infrastructure pressures, and the need to keep society steady as costs rise. Now, tonight, we begin a 4-part series on the risks, the trade-offs, and the policy choices Singapore faces in the year ahead. Nadirah Zaidi starts with the race to keep our markets open, competitive, and connected, even as more countries turn inward.
Secretary of Commerce, Howard Lutnick. Thanks, Howard.
2nd April 2025. That's when US President Donald Trump unveiled his reciprocal tariff plan to the world.
We never charged anybody anything, but now we're going to charge.
Just like that, some 90 countries were hit with a minimum 10% tariff across the board, a move not allowed under World Trade Organization rules. On top of that, the WTO's appellate body, its final court for global trade disputes, was effectively paralyzed after the US blocked funds and disallowed new appointments to the panel.
It effectively broke what was called the crown jewel of the WTO, which is the dispute settlement system, the way that governments can resolve disputes with one another.
With no way to negotiate these tariffs, countries scrambled to form new alliances and to revive stalled trade talks. In the region, Indonesia and the European Union finalized negotiations on a free trade agreement, and the EU accelerated talks with the Philippines, Thailand, and Malaysia.
The world we have known has changed fundamentally, and it's not clear that a minus America, minus one world can really continue to work the way it has.
For Singapore, deeper cooperation has also meant building new platforms like this to boost connectivity and keep supply chains open. It's what's being called the FIT partnership. Since it launched in September, membership has grown from 14 to 16 countries, with more signaling interest.
The numbers keep escalating because governments around the world are recognizing that being outside of these trade arrangements is increasingly problematic for their own businesses and their own consumers.
But analysts warn that there's a risk here. Smaller trade initiatives could lead to even more fragmentation, with inconsistent rules between and across agreements. That's why Singapore is also trying to fix the global system itself by pushing for WTO reforms. That includes new rules for emerging issues and flexibility in making decisions when full consensus isn't possible.
Even in a bifurcated Cold War, there was a Switzerland, a small country that can bridge. And that could be Singapore's strategy outcome. It wouldn't be a bad outcome.
If these reforms are successful, it could eventually bring us back to square one. A revamped WTO anchoring the multilateral system that has guided global trade for decades.
And now for more analysis, we're joined by Suan Teck Kin, who is Executive Director and Head of Research at UOB. Teck Kin, great of you to join us. Now, the Singapore Economic Resilience Task Force was set up as a response to these challenges mentioned in the earlier story. Now, in your view, what are its top priorities for 2026?
Right, good evening. Yes, the committee has set up 5 committees on the economic strategy review. So these priorities include improving Singapore's position as a global hub, make sure that it's competitive, and make sure that it's efficient in our value propositions, right? And also the other thing is, I think the priorities will be on the AI diffusion, artificial intelligence diffusion. That means spreading to different to the companies and also at the workers level. And of course, another priority I think to look at will be on the human capital and also in terms of entrepreneurship, how we can grow our Singapore core. So these are the key, I think, the priorities for the economic strategy review or the ESR. I think over the next over this year and over the coming years as well.
Now, based on your observations, do you think businesses have actually felt the impact of CERT yet, or do you think it's still too early to tell?
Well, at this point, what businesses are already feeling is what the program earlier talked about, all this fragmentation, tariff impact, and also I think a high cost of the more fragmented it is, I think the higher the costs are to do business. So in terms of the ESR and also the certs, what they are trying to do will be to reduce the impact, right? To reduce the impact and also look for different ways to overcome all these challenges. For example, I think this AI diffusion, I think that will be part of the solution, and also to ensure that Singapore is competitive through various ways to support businesses, like, for example, looking for new markets, non-traditional markets for businesses to lessen the impact and also to grow businesses and also expand the markets.
And speaking of support for businesses, the budget is upcoming next month. What are some items you're anticipating in terms of policies or even grants being disbursed?
Right. Yes. With the budget coming, I would see that some of these proposals or the thinking from the various committees will be part of the new will be part of the budget process. So one of these things will be in terms of expansion of market, the non-traditional markets. Those will involve, I think, exploring unfamiliar markets, and the cost will be high. I believe some of these cost support coming in from the budget will help companies to explore new markets rather than the traditional ones that we have been so used to. For example, ASEAN, China, US, or Europe. I think there is time also to explore the non-traditional ones in Africa, Latin America, Eastern Europe, and other places. The other thing that would be looks like it's going to be part of the budget will be in terms of the AI diffusion, artificial intelligence diffusion. That will be also quite expensive, and the government would have to see some ways to support companies, for example, implementing AI solutions to help companies to become more effective and also more competitive.
Now, Teck Kin, we'll come back to you for more analysis in just a moment. But first, with US-China tensions pushing firms to diversify, early investments are centering on data centers and also other high-tech industries. Some Singapore companies are also looking across the Causeway for more space and lower costs. Nadirah Zaidi again with this report.
This co-working hub, launched 3 months ago, hopes to meet the rising demand for workspaces from companies setting up in Johor. For just 330 Malaysian ringgit, roughly 104 Singapore dollars per seat, businesses can be situated near the Johor-Singapore Special Economic Zone. Already, the space is 30% filled.
So industry is actually quite wide. I have clients that are in accounting and tax and audit. I have clients in furniture. I have clients in retail, even professional services like marketing services. So I renovate the office, and if they need people and if we can find the right people, then they come in on a co-working engagement for per head, per desk, per seat kind of arrangement.
The surge in interest is partly due to strong cooperation between Singapore and Malaysia. From incentives giving companies a special corporate tax rate of 5% for up to 15 years to lessening regulatory burdens and bureaucracy. While much buzz has centered around data centers and high-tech industries like aeronautics, one analyst says there are opportunities for small and medium-sized companies.
As we all know, Singapore is pretty costly. Land cost is expensive. So there's always been looking for a place to bring their manufacturing to where they can save on cost, but yet it's close enough to the headquarters in Singapore so that you can have better control and better coordination.
That's especially as the JSSEZ spans over 3,500 square kilometers, more than 4 times the size of Singapore. Talks are also ongoing to deepen economic integration with Indonesia's Riau Islands, Bintan, Batam and Karimun to become even more attractive to investors.
Experts say this ambition should expand beyond Singapore, Malaysia and even Indonesia's Riau Islands to include other ASEAN countries. With the region projected to become the world's 4th largest economy by 2030, they say it's becoming an even more attractive opportunity for investors, especially as geopolitical tensions between US-China continue to deepen.
China has always been the manufacturing hub for the world. So they actually offer great skill, great supply chain and low cost. So it's very difficult for another center or another zone to compete with them. But now with this tension and with the fragmentation of the supply chain, investors are actually looking to diversify the risk.
Experts say what's needed is maintaining business certainty and keeping to the growth commitment in the JSSEZ.
And we're back with Suan Teck Kin, who is Executive Director and Head of Research at UOB, for more analysis. Teck Kin, now beyond the incentives, what do you think are the top 2 or 3 factors that will decide whether the Johor-Singapore Special Economic Zone actually becomes a lasting second base for Singapore firms, instead of just a short-term cost-cutting measure?
Right. I think definitely, I think there are more issues or more factors to consider rather instead of just incentives to be there. So some of these topics will be some of these areas that investors or businesses look at will be like, for example, policy continuity, political stability, labor supply stability, and also resources such as electricity, water. These are all very important factors when businesses think about investing in a location. For example, in this case here, Johor-Singapore Special Economic Zone, because we are talking about involving quite a lot of money and also time and commitments to invest in a company rather than just a short-term play in investing in stock market. Is a totally different game altogether. So these are some of the factors that investors will look at very carefully before they move, and also sinking roots in that location.
And now, we have the US-China tensions really pushing diversification. Which other sectors do you think are most likely to move into Johor next? We've already seen the data centers and high-tech industries moving in. What would be the biggest risk to that shift now?
Well, at this point, I think the AI play, artificial intelligence play, is still quite a big one. And I think for Malaysia has always had this advantage in E&E sector, we call that, or electrical sector. So the high tech area will be the one I think will also be a key focus in Malaysia. So that in these US-China tensions, you have to serve the US market at the same time, and Malaysia stands at a very advantageous position to support the US market through its location, the China Plus One story. So that is the Malaysia's key advantage, and the high tech sector will be one key area that companies will increasingly focus, not just data centers, but also the related supply chain and also the ecosystem around electrical and electronics sector.
Teck Kin, thank you so much for your insights. That was Suan Teck Kin, who is Executive Director and Head of Research at UOB. And tomorrow, in part 2 of the Year Ahead series, we look at the bread and butter issues affecting Singaporeans, how advanced technology is changing the workplace, and how workers can adapt to an AI-driven future.